Hey there, and welcome to today's daily premium newsletter for May 1st, 2018. So the market's movement was largely neutral today, with several sharp corrections throughout the day and slow recoveries in between. It's become clear to us that we're back to the battle of attrition between the bulls and the bears, and we won't see a resolution until a clear signal emerges. Meanwhile, in today's news, we learned that US federal regulators are quietly examining whether Ethereum should be classified as a security. The Securities and Exchange Commission, or the SEC, and the Commodities Futures Trading Commission, or the CFTC, are investigating whether many well-known cryptocurrencies, not just ICOs, should be regulated as securities under federal law. The report is sparse on details, but it cites sources who assert that regulators are evaluating whether Ethereum's creators exert significant influence over their value, in the same way that companies' stock price depends on its managers and their strategy, performance, and investments. If they find that to be the affirmative, then Ethereum would be classified as a security. The CFTC chairman, Chris Giancarlo, who became a hero in the cryptocurrency community after he gave positive remarks regarding crypto in front of a congressional hearing in February, said he doesn't see crypto legislation coming from the federal level in the imminent future. He notes that the CBOE and CME, two major US exchanges, are successfully operating Bitcoin futures contracts. But he said the complicated nature of Bitcoin and cryptocurrency makes them challenging to regulate. While the future of crypto in the US may be a bit murky at the moment, there was certainly better sentiment on the global stage today. As we learned in April, the International Monetary Fund affirmed that cryptocurrencies do not appear to pose risk to financial stability. Similar to this sentiment, the Hong Kong Financial Services and Treasury released its money laundering and terrorist financing risk assessment report today and briefly discussed cryptocurrency. The report assumes that a system of payment such as cryptocurrency only becomes a risk to money laundering and terrorist financing once it becomes commonly used. The report's risk assessment of stored value facilities, such as the popular Octopus card, PayPal, or Alipay, are far higher. All in all, the report affirms that cryptocurrencies pose little risk of criminal activity. Also coming to light is the study by the Center of Sanctions for Illicit Finance of the Defense of Democracy's Foundation, which indicated that only 0.61% of fiat currency that is introduced into cryptocurrency trading has been used against regulations. Despite the facts stating otherwise, there's still been a trend of associating cryptocurrency with illicit activities. Just today, the Financial Services Agency of Japan is putting a lot of pressure on the country's various cryptocurrency exchange platforms to stop trading privacy-focused coins such as Monero, Zcash, and Dash, claiming that various investigations have revealed that these are favored by criminals. Despite these setbacks, we're still very positive for the direction things are going. As an indication of that, Coinbase announced that it's preparing to open an office in Chicago and add support for block trading. Block trading allows traders to place large block orders outside of the exchange's normal order book. This is clearly Coinbase getting ready to build out its institutional client base and solve a key pain point. We clearly see this as the direction the market is taking, and this is just one more weather vane indicating to us the institutional investment that is quickly coming. And so with that, I'll turn it over to Doc. Have a great rest of your day, and talk to you tomorrow.
Hi guys, it's Doc for ReadySetCrypto. I'm in the Binance app right now, and I'm going to go talk about tonight's trade that I just sent a Telegram alert on. And so what I'm going to do is I'm going to go into Exchange, and I'm going to type in ADA. And so ADA BTC shows up. There we go, ADA BTC. And I can see, kind of what the current price is going for right now. You can see that what we have here is, this is the trade history. Here's the bids below the current price. Here's the offers above the current price. And so we have a fairly tight bid-ask spread here, which is 3929 bid by 3931 offer. So in other words, if I want to buy this, I could just click this price here and then put that into the price, and then boom, I'm going to be instantly filled on that. Don't necessarily want that. I'm going to start by seeing if I can work the offer down here. Now I've calculated the position size, which is going to fill in right there. So I want to get 211 of these, and I don't want to use market. I want to use a limit order. And that limit order right now, I want to set for 3931. 3931. I'm going to see if I can work the bid side of this. Okay, so 3931, 211. Now I'm going to submit my order, and it looks like it was immediately taken. So that didn't take very long. So here we go. I look at the trade history and I see that just a few seconds ago, we bought 88 BTC at the 3931, filled 211 of these guys, and there's the totals for what we paid and everything like that. Okay, so I'm long. Now what I'm going to do is I'm going to walk you through some of the math behind the trade. Okay, here's the chart first of all. So we have this nice rounded base on the chart, and now we're coming up to this sort of stair-stepping behavior. And even though this isn't a tremendous amount of energy, it doesn't seem like Cardano is waiting on it. It's consolidating, breaking out, and it looks to be starting to break out right now. So I'm going to kind of short shift this one and try to enter before the next breakout. Now what I'm going to look for, and this is just based on the chart, this is just based on my eye, and if we're entering somewhere below 0.00004, if I get it up to about 0.00005, that just roughly is going to be a 20% return. And so that should be a nice swing trade. A nice swing trade is going to be anywhere from 10%, 20%, 30%. Last week we got a 30% or 35% trade on ontology. So that's kind of generally the area that we're going to be looking in. We're not going to be looking to run this thing for forever. You get hundreds of percent. This is just meant to be a quick trade. Get in, get your fair share, get out. Okay, so I want to remember that number because I have to go back to the broker and enter that good till cancel order in. Okay, so let's talk about the math behind this trade, first of all. Now, I said that in the trade alert tonight, I said that this is a fixed risk position. It's very difficult to say those two words together in the English language. Fixed risk position. Okay, so what does a fixed risk position means? Well, based on my account size, what I want to do, and I'm going to normalize this to the US dollar just so that it makes sense for me and for most people. I want to put $75 of risk into this trade. Now, that's the most that I will ever put into this trade. If Cardano ends up, as soon as I enter this, crashing and burning, going all the way down to zero, maybe the coin gets just completely delisted and it's gone. It no longer exists. This is the most that I'm ever going to risk in the position. And this is one of the biggest mistakes that I think retail traders make on average is they put far too much capital into every position. They argue with me and they say, how am I supposed to make money if I don't put bigger positions in play? And I say to them, I'm not suggesting that you can't put more of your capital on board. I just want you to keep each position to be really, really small. You can add up more of these small positions if you want to, as you see fit, as you earn the right to do so. But I think risk first. I don't want any more than 2% of your account being at risk on any one position. So I have an attitude when I enter this position that I'm saying goodbye to it right off the bat. So I'm literally giving it this sort of Viking funeral. We put it in the boat, we set it on fire, we push it off from shore, and there it goes, it's gone. And if it happens to come back, terrific, great, awesome. But I've already released it. I'm not going to be sitting there watching this every second of every day. I'm not going to be losing sleep. Oh my gosh, I hope it goes up, otherwise you know what happens, right? You've all done that before because you've put way too much position into one coin or one currency or one asset, and then you watch in horror as the price goes the wrong way. How would you like to feel? Nothing when you put something into a trade. That's what you have to do to effectively manage a position, is you have to feel nothing for it. Only when you're able to have no pull or no association with that position will you be able to manage it effectively. All right, so got that set up. So 75 bucks. Now, what do I do here? So what I'm going to do is I'm going to look over at Bitcoin and say, all right, $75 divided by, in this case over here, 9060. And this is going to be slightly different, but if I get out the old HP, if I divide 75 by 9060, I'm going to get a nice long, you have to be good with decimals when you're in this business. So you get a nice long number here, 0.08278. Okay, or about 0.0083 BTC. So that's the BTC number that I'm putting into this. Okay, so I need to erase this. So again, 0.00278. And what I'm going to do now is I'm going to go all the way down to see what the current price of Cardano is. And as you remember, it's actually gone up a little bit. So we're going to divide that 0.08278 number by 0.000039, let's say 31, which is what we got it for, divided by. And I'm going to come up with a number. This is going to be about 211. So that's why you saw me put 211 in for the quantity of that, which is roughly going to be putting about $75 of risk into this. So whatever your base level of currency is, whatever your fiat currency is, whatever, you got to be able to associate it to something that gives you a tangible value. That's what I'm doing here. So this gives me a volume. This gives me a price. This gives me a risk. I know everything about this position now. Now the only thing left for me to do is simply put in the good till cancel exit order for this position. So let's go over to the broker and do that now. Okay, so I'm back in the exchange here on Binance, and you can see my current, this is one of the swings that we already have in place. I've got that good till cancel order out there for 0.002, and it's hanging in there. It's doing okay. So I'm going to go down here to my limit. I'm going to go down here to my limit, and I'm going to go, in this case, we need to change this to ADA. All right, so we got ADA. We need to flip this over to sell ADA. And what I'm going to do is I'm going to select 100%. And it already knows that I have 211 coins out there for ADA. So I'm going to sell that. Now what's the price going to be? Well, this is where we have to change this. Otherwise, we're going to have a very quick sell. And so I'm going to set this for 0.00005 BTC. And that's going to be a good till cancel. This has actually been a good till cancel. There's no option in here to set it for day order or good till cancel. So it seems to be by default, it's good till canceled. So here we go. Enter the sell. And now we've got a sell order sitting out there holding. And it's that simple. I can now forget about this trade. Simply just move on, right? And I can hold this thing in perpetuity if I want to. If I just want to hold on to this, I know what I've risked, but again, the point here is that I've sort of said goodbye to it already. I've said as soon as I enter the position, I disassociate myself from it. I've let it go. If it happens to hit my limit order, outstanding, awesome. Most of the time I forget about it, and all of a sudden I notice, boom, it's been hit. So I hope this example helps. I want to change you guys from being these nervous, over-leveraged retail traders into more precise, specific swing traders. So swing trading should be a very small portion of your portfolio versus your buy and hold. All right, folks, that is it for today's report. Thanks for listening. We'll see you tomorrow evening.